Man.
Hey,
What's up?
looking good.
Oh, I do it for the people.
Oh, right, right. That's what they want you to do. Hold on,
Exactly.
are we working?
Exactly.
Oh, we're good. Hey, it's this has been great.
No, I'm surprised we're doing this now. I thought you were at a party or something.
I was. It was my surprise birthday party, but I got back. Kids are about all things SVB now. No, I was, but then had to go home. Right, it's 9. Kids have to go to sleep, so.
Fair enough. Fair enough.
But this has been good, man. It has been. You know, it's unfiltered. I think it's fun. You don't
Yeah,
think it's fun?
no, it's fun. People like the real stuff. It's like
Yeah,
the
of course.
unedited, say whatever profanity, you want, and then just,
Right.
you could go down all kinds of rabbit holes, and then it's like,
Yeah.
okay.
Yeah. But I think it's fun, and then you think it's fun, and then I think it's good to get. It's like yeah. Last night or this morning, I
Mm,
woke up and I was like, okay, there's more to talk about because I was like hearing it from the UK side. So I called my
mm,
UK buddy, Japanese investor, but based in the UK. And I was
mm.
like, okay, what's your reaction, right? And he was halfway drunk, right? It was like
Yeah.
12 midnight, but he was even more entertaining, right? So
Uh,
he's like going on about what he thinks and stuff. And yeah, I mean, I'm just trying to figure it out, but it's always better to figure it out talking, right? Otherwise,
Yeah, I mean, lots of views, right? I think, especially now, right? Because I feel like everyone's been like talking to other people, and so they're sort
yep,
of piecing it together
yep,
around like how big is this?
right.
Um,
Hold on, let me kind of put this on LinkedIn and Twitter. Talking to Ben's son again. Get the
this is
latest.
live.
This is live.
Oh,
About on follow up conversation on next steps of SVB. About next steps of SVB and what becomes of it from a bank review.
from a bank review. Yes.
Yes. And then now it's tweeted. See who else is coming. No, so but the stats have been good. I mean, yeah, I was like pretty interesting. But yeah, I mean, it's also a surprise birthday party, so I got a T-shirt.
Oh, dang.
Yeah,
No,
it's
I'm
very nice.
I'm supporting the Yeti today.
Oh yeah, I know, I saw that.
We're
What?
not. This is not a sponsored advertisement, but I
They
really do
should be.
like this sweater. The Yeti
Yeti
sweater,
is the. It's like the what is it? The not bootlegging. What is it called? Um,
like coolers and stuff.
yeah, the coolers. Yeah, the
Yeah,
coolers.
yeah,
Yeah,
yeah.
yeah, yeah. The
No,
high end coolers.
I picked this up in Austin. There's like a dedicated Yeti store.
Yes, there was by Soho
Yeah.
House.
Oh, dude, yeah, you got to
Yeah,
go.
yeah,
This
yeah. I know. I saw that.
bomb.
Is it that good? Their stuff?
Oh, dude, it's amazing. But on top of
Really?
that, the most amazing thing about the Yeti store is they have a bathroom, and I mean,
Okay.
God,
That
the
doesn't.
toilet is yellow, or like the toilet seat is yellow. It's like the craziest looking, like, because the whole bathroom is black, and then the toilet seat is yellow. And then
Right.
like you go in there, and it's almost like you're walking into like a golden toilet, basically, right?
Okay. Okay. Cool.
And then like as you're peeing, you're realizing you're like, this is pretty smart. Like, why wouldn't you make a toilet seat the same color as urine? Like, what is the point of having like a wide sort of toilet? You know what I mean? It's like, I've seen the black ones before, but then the yellow one
Right.
is completely novel. I was like, oh, great. So anyway, whatever you
That's.
may think of Yeti, the product, whatever it is,
I don't know the product.
the bathroom is definitely worth a go. Put it that
Got
way.
it.
Go and
I don't
check it
know the product. I am. By the way, I'm gonna put Instagram story. Let's see.
out. Dude, you love
So-
the gram. You love the
I
gram.
love the gram. No, it's actually I haven't gotten like hits on it, but whatever. I'm gonna continue.
People tune in. They're like, "Oh, I'm gonna hear about Silicon Valley Bank." Like, no, well, yes, but we got a lot of random shit to talk about first.
We do.
Toilet,
We do.
Instagram hoeing. Uh,
That's right. All right.
what else
Hold
we got to
on.
get into it?
I sent you the link. Why is this link not working? This one. Copy. Paste. Here we go. Live streaming now. Live streaming. Talking about SVB. Here we go. All right. So, all right. You did not know that things were. Oh shit! I should have tagged you so you can like do it. Fuck. So you lost money. I'm not gonna ask you how much, but obviously it didn't go down the way you thought it would go down.
I mean, no, definitely. Well, yes and no, I guess.
Okay.
But
Okay.
it didn't go down the way I thought in terms of. And look, I'm still not completely done on it in the sense that, this weekend, it's a critical weekend, right? Like, this is where deals are going to be made. And, typically, right, it's like merger Monday. You got to wait till Monday. That's when something's going to get announced.
Okay.
A lot of news happening over the weekend, right? Like,
Elon. Yeah, I'm gonna switch on Twitter. There's rumors of Elon. That's what some of the Europeans are saying.
Yes, maybe Elon with his aspirations. Maybe there's
open
obviously
to the idea.
Open to the idea. JP Morgan. There's.
Oh, is that what you're hearing? Okay.
Oh, it's JP Morgan. There's all kinds of other banks sort of in the mix.
Finance.
Right. I mean, surprisingly,
we talked about these
funds. I would say. I would have thought I would have heard more of the VC guys.
That's true.
Involved.
Right.
But all I'm hearing about is whining.
The VC guys. Yeah, the VC guys made a statement. Said we are appalled or blah 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 blah. Right.
Yeah, but everyone's writing SVB's obituary, right? It's they were a staple of the VC world for 40 years. We stand by them, but we told everyone to move their fucking funds and go to Mercury or First Republic or what other neobank, right? And you're like, okay, well, great.
Yeah, you started it. Yeah, you started it. Yeah.
Exactly. So I'm sort of okay, well, the VC fund's completely worthless at this point.
Right.
And it's gonna be the players that we talked about last time, right? It's some rich people get together who got a lot of money, who got other aspirations, right? So family office type groups or another bank. It seems like the likelihood. And look, I actually think, and we didn't talk about this last time, is going to be potentially the other credit funds. So SVB competes against a lot of these major credit funds, right? Ares. Or Owl Rock, who venture lending.
Right.
So even Brex, right? Brex also has an arm where they do lending.
I did ping Shy. I was gonna try to get him on a call. I don't. Yeah. So there's probably not much you can say.
Yeah, but I mean, look, all this is possible. But look, at the end of the day, if I'm a buyer of these assets, I probably am sitting there going well, look, I don't want to take on any of these liabilities, so to just buy the book, right? You buy the loan book, you buy it at probably cost, right, or maybe some premium, at 1.1 times book, and then you just leave everything else behind, right, and you let the FDIC deal with it. Whether or not the FDIC goes for a deal like that, I don't know. But
so what is the process? So the FDIC has taken over now. Yeah. So do they start bankruptcy proceedings? It's not technically a bankruptcy, right?
Well, it's in receivership. So they basically just think of it as being nationalized by the U.S. government, right? They're we've come in, we're taking over operations. First step is the people who are have 250K or less. Anyone who's got any money in the bank, right? You're going to be subject to the threshold of 250K. You got 250K in. Well, you get money on anything above 250K. You're sort of sitting in the ether, right? Where you have to wait. You have to wait for asset sale. You have to wait for you're just sort of waiting in line to get sort of paid. So think of it. It's almost like bankruptcy in the sense that it's an orderly sort of wind down. So yeah, they're basically. But yeah, the only person.
So process-wise, the 250 will get out. the gray zone, then what will they do? Will they start then shopping?
Oh yeah.
Or okay, so FDIC shop the bank, or who then? Who runs that process? Or did they
I think
hire?
yeah. My sense is going to be run by a banker for sure. In the
Right.
sense that like probably already in there, they're probably fielding a bunch of offers, and I
Right.
think you would right just in the press, and it's something that we discussed, right? Like people couldn't value this thing because no one had any idea how many deposits are going to be left by the end of it, and
Mm.
what kind of actions right SVB would have to do to sort of um, fill the withdrawals, right? So then they
Mm.
like impossible to figure out. So the FDIC basically came in to basically plug this. Said, okay, we're stopping any movements,
Mm.
follow the orderly process, so that at least anyone looking at the situation could, uh, I'll call it, accurately assess sort of the
Right.
value based on this time.
Got it. Okay. So someone's going to take over the process. They're going to value the everything. Everything's on the books, the assets, liabilities, everything.
Mm.
And then I guess and then run a process to see who would want to buy what, essentially. Right?
Yeah, and it's gonna be quick. As in, like, it's like literally like, I mean, it's crazy in the sense that, like, this is very much like what it was like in 2008 when Bear Stearns went under,
Mm.
and basically like the deal to acquire Bear Stearns happened like flash. And JP Morgan, I think, man, I think like JP, I think the stock, I think JP Morgan had offered like $20, and then by the time this whole process ended for them, this was like over the course of like a couple of days, it was $1
Mm.
or something. So I think they
Mm.
bought Bear Stearns for $1 a share, which was I think at the time the equivalent of the real estate that Bear Stearns at the time owned their own office building. So I
Yes,
think
never stepped in for them, right? It was just a private offer by JP.
all the government stepped in for that one.
Did they?
Basically,
Okay.
like, oh yeah, as in like they brokered the whole thing.
Oh yeah, yeah.
Uh,
No, true, 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 true. They didn't stop trading, did they?
uh, yeah, I think they halted the share price. They halted the stock.
Oh, the
Everything
entire. Did they hold just them or the entire market?
halted it, but like the stock price, the stock was definitely halted that way.
Okay, okay, okay. I didn't remember that. Okay. All right. So run a process. Okay, it's quick, and then what price? So you say the assets won't matter much, and then basically it's whoever can basically plug in the gap for customers.
I would say, yeah, whoever can basically assume as much of it as possible with the least amount of government support is
Mm,
ultimately call it the winner here.
mm,
And whether or not it goes in pieces or it's the whole thing, I think that's sort of up for debate.
mm,
Because like if I'm evaluating now, I'm basically like looking at the assets, and I'm sitting there going, if I'm acting on any abilities,
mm.
that's going to be my offer, right? And then I'm sure there's going to be some horse trading, um, with I'll call it the government, but FDIC government sort of entity. But
Mm.
that would be the way any buyer is probably looking at the situation is like, how do I get the assets without taking on any of the liability?
Right. Okay. All right. And then we talked about the candidates. There seems to be no shortage of candidates, right? So that's not the issue. And it's in everybody's interest to get this worked out.
Mm.
Issue as well. There's a willingness to get this deal done.
Yeah, I think there's like the book is. I mean, it's not a franchise value, right? Um, in SVB's sort of loan book, right? I think they've obviously got, I obviously know the loan portfolio extremely well, but
Mm.
overall, like based on what I've seen and heard, I think not like a horrible loan book. Um,
And by the way, what
but
is
that,
what is considered good and what's considered bad? Loan book.
I mean, loan books are just the default ratios, loss ratios. They would look at like how many loans are potentially
Mm.
accrual or not accrual, that kind of analysis. Now,
Mm.
it's a bit tricky because this is probably the trickiest part about the loan book for any buyer now is that venture debt lending, believe it or not, I mean, surprise, surprise, but right, a lot of these debt packages probably in some level of default that were probably, I'll call it, being flexible around. So I think right now, right, cash, SVB may have probably, turned off amortization on the debt. They may have loosened out covenants. They may have, loosened up on how much cash you need to make. There might have been so many things that they would have done to be flexible for their client borrowers that it's possible, right? The loan book is obviously not in like the greatest state, but I think that comes from territory just because all of, venture right now is trapped, right? And everyone's like, focused on margin, growth is not important this year, et cetera, et cetera. So in that sense, the loan book could be tricky in that, borrowers right now, the current they're in is not the strongest. So there's also that situation where, people in a scenario in which it's already a fire sale, layer on top that, the book is probably in some shape of not 100%, and therefore it's like amplified, I'll call it, discount, what people would be looking for.
Okay.
So that if they could get it at one time book, that might actually be an amazing outcome for SVB.
And actually, kind of maybe hear the thing about the CEO selling his shares like 2 weeks before this thing. I didn't, because he would have to report this probably a quarter in advance, right? So it's not like he timed the sale.
Yeah, I don't think he timed it. I mean,
yeah, right? It doesn't sound.
I don't know. You never know, right? I mean, it's always possible in that.
But that if it's proven that he's right, he would not I think be dumb.
Yeah, I don't think so. But I think obviously it doesn't smell right, and I think as a CEO of a financial institution whereby you're sitting on a ton of U.S. Treasury that would implode on the basis of mark to market, and this is probably known, right? It's not like this you knew about this like yesterday. It's like you definitely knew about this months in advance. So one could argue that this guy may have had a whiff of something and decided he would sell some of his shares. So yeah, I would argue that I don't think it was there was any sort of malicious intent, nor do I think I thought that SVB was going to go under the way that it did on account of what they were doing. So in that sense, I don't necessarily knew, right? But I think that he, smart individual, thought, hey, actually,
de-risk a bit.
I should take some off the table. I do think he had some of that.
Right. I'm gonna look on Twitter and see what's other points we should explore. And so just to let's see, the European side, they're protected up to £80,000 actually, so not $250,000, which is basically nothing.
Yeah.
10 from Y Commodore was saying 30%. Basically of their portfolio will be affected, right? That I've talked to is it's between like 30 and 40%, depending on the jug.
That I don't know if people have thought, but it's not only just like the portfolio companies, right? As in, obviously, the portfolio companies have cash today, but the funds themselves also have cash.
Yes.
Yes,
there was that too. Yes.
Yeah, and then not only the fund, then it's like even the I'll call it the third-party vendors that serve funds and or service the portfolio companies, whether they're in the process payroll or all these other things.
Yeah.
Everyone's got SVB. So my sense is this is not just going to be like an isolated incident. It will have some ramifications for sure. It may be isolated to just, I would call it the venture sector. So it may not be like that, I'll call it contagious, the entire sort of, I'll call it banking system. But to venture, I mean, dare I say, like this is Venture's version of like 2008, right? Where, as as you probably know, right? Like Venture, call it valuations, haven't really come down that much on the
Yes.
books,
Yes.
right?
Yes.
And now with this, I mean, it is a complete, this is a revaluation.
Right.
Everyone looking for from the public tech markets have like hammered. And I would say, the guys who have tried to go and get money probably have gotten hammered on valuation as well, but not as much. But now, around, think about how many startups are going to be short of cash and are going to be looking for cash and are going to be strapped because they can't even get it from their own, their initial investors, because their initial investors might be strapped as well.
Right.
So it's going to be like the existing investors are going to be playing with their portfolio because they're going to have to pick and choose who lives and dies because they might be capital.
Right.
And then the companies that are looking for capital, they are going to get exposed on their valuation because, despite being kumbaya family in the valley, I mean, right. So, anyone looking for money now, I mean, people look at Stripe and they go, "Oh, dude, horrible market timing. You should have just paid for that shit yourself, or you should have, done something. Why would you raise like that much money to pay like people taxes, right?" But they got got it off, and I think it's like 6 billion at like 60 billion valuation or something. But and if they go right now, if they didn't finish that now and they try to go now, oh man, they'd be. It would be like beyond. So I would say now, as a venture investor, this would be an opportune time to go out and put, especially just given money's been sitting on the sidelines. Like, I'm right. It sounds bad, but you go through primary for like strap for cash you're looking for it, or you can even go secondary, right?
Right.
Who, like, I need cash.
Right.
Sell down some of these positions. So it's like, yeah, it's going to be super interesting, I think, for returns. And I think if we look back, whatever years from now, we look at sort of the vintage, right? This 2020.
Right. This could be a good year. Right. If
Venture.
you have cash.
Yeah.
Actually, I was talking to Macquarie banker today. He does oil and gas. Yeah, oil and gas guy. And he was basically saying the way he looks at this thing is he says it's just a revaluation. The public equities have been revalued, and was just saying this is just kind of the same thing on the private side, right? And I was like, okay, that kind of makes sense. So it kind of needed to happen. Probably didn't think that this was going to be the thing that got everything going, but I guess it is what it is. Do you see the ramifications? How about the effects on other banks? So I wanted to talk about the effects on the other banks. And the other thing I want to bring is actually talking about stablecoins, because that's actually kind of losing their peg as well. So does this impact other banks? So if you're like, yeah, the other one, First Trust and all that type of jazz, wouldn't you be in a better position? Now people are trying to find, people don't want to hold cash, right? They got to. So the other bank should be in a better position, no? Unless there's another bank run then. But
yeah, like only if like they don't have the as SVB, put it that way.
Right.
And SVB basically like ripped the bank off, right? Like, as we discussed, if they didn't go out with that equity rate, they might have been able to do this and have gone completely under the radar and fine, possibly, right?
Right.
And now it's like, okay, the market is freaking out because they're just like, who else has like this issue of basically having, mismatched assets and liabilities? And, to be fair, like I suspect a lot of banks have this issue. And the most ironic, they're getting hosed for holding supposedly one of the safest assets in the world, right?
Yeah, T-bills.
Exactly. It's like
10-year T-bills. Yes.
Yeah. It's like U.S. Treasuries are meant to be safe haven assets. And it's ironic that U.S. Treasuries are the reason why companies go under. So like, what's happening? So So in that sense, I suspect a lot of banks are going to have a similar issue. So from that perspective, the contagion is that SVB has shined a light on a very dark corner. So people are going to be like, yes, adjusting their book as quickly as they can, as safely as they can, right, without drawing a lot of attention. But I think that's going to be, now that what's happened, everybody under a microscope, right? So so I would say, like, if not for why SVB went under, this should be good, like First Republic or Mercury, right?
Right.
Oh, competitive market,
Right.
and swoop in and like we can be, right? Of course, them. But it's now a question of like, well, are they in the same position or not? And nobody knows.
Right. But so I guess as long as they don't get the messaging, as long as they don't come out and say, "Hey, we're trying to raise equity," or as long as they just don't come out and do anything drastic,
Yeah, I
right?
think
Don't rock the boat.
correct. But I think like the best banks right now, the ones that are in the best position, are probably going to be like, JP Morgan, Bank of America,
Sure.
City. They're
Right.
the ones with the balance sheets.
Right.
And I'm a startup right now. Where am I going to put my money? That's where I would want to go. I don't want to go to some like regional bank or
Right.
one of these like First Republics or right now, because you're just, dude, SVB was like the be all end all. Now it's gone. It's like, dude, I gotta go to Morgan. Like, why even
Yeah.
fuck
Why
around?
even think about it? Yeah. True.
Yeah.
Right. Okay. Where do you think now? Yeah, USDC started slipping.
Yeah, I mean SUBs. I mean USDC, for example, right? They say they got like 3.3 billion stuck in Silicon
Oh
Valley
yeah,
Bank,
Circle. Yes. Yeah, Circle
right?
has. Yep.
And that's, what do they have, like 40 billion or 50 billion in reserves? So it's like a percentage, right, of their return base. So there's clearly a depeg as a result of that, because
Right.
250K of that 3.3 billion person. The others, no idea. So it definitely does destabilize USDC for sure.
Hmm.
And yeah, I mean, it's the market now, right, where it's like shoot first. Now,
Yeah.
so ultimately, yeah, USDC, and look, all the other, like, everyone's basically shut down the ability now, right, to sort of move USDC around and convert it and everything. Coinbase shut down, Binance shut down.
Yes, that's right. Yeah.
So that is basically what the FDIC, right? They're like basically not allowing anyone to take money out. So all these exchanges are basically shutting it down and like, well, let's wait. It's the weekend, right? And they're using the banking system shut down, and that's what happened. But in reality, they're just basically shutting it down, shutting down the exits, right? So that things can stabilize and people can get the news. But in reality, like, if they did not do that, I mean, let's put it this way: I bet you the line on that exit door is so long that if those were open, USDC could be gone too, because they're in this situation where there's a mismatch, and their gap would be 3.3 billion minus 250K. That would be sort of the gap for them. In the hole is.
So on the dexes, I don't know if you know the FX rate. It is the exchange rate. It is on the dexes. It is USDC to USDT is about 1 point. It's not 1 to 1, but it's like 1 to 1.11.
Right.
So it's decent. And then that's it. This is on Uniswap. On TUSD, which is what I use because you can actually off ramp TUSD pretty easily. It's 1 to 3.
1 to 3.
1 to 3. One TUSD dollars USDT.
Okay.
And I think it's because basically it is a super easy off ramp solution.
Mm.
So everyone's kind of rushing to that and paying. And then what else? USDC to TUSD is 1 to 1.2.
Wow.
So yeah, I've never believed in USDT, to be honest, because I think it's even more opaque on what's backing it, right? Because there were rumors it's like T-bills. I mean, it just we weren't sure, right? So I heard like equities. property, stocks. I was just like, so what is? And also disclose what was behind it. So it's like, okay, I mean, at
I
least
get it.
it's 1-to-1
Yeah.
with and actually, I was telling somebody, I was like, it is 1-to-1. In If Circle goes under, right? If
Mm.
Circle goes under, would the bankruptcy lawyers honor that 1-to-1? And I was just like, I don't know.
No, I mean, let's just say Circle filed for bankruptcy, right?
Right.
I mean, obviously, subject to jurisdiction, subject to a whole host of things. But let's just look at it in the context of like first principles. I think that they're whole. Obviously, they have assets and they have liabilities. At the end of the day, at least on the surface, without understanding anything about their financial, they definitely have a gap of 3.3 billion minus 250K.
Right. Right.
So, in that sense, it's unhonorable on a straight cash basis, and basically, like, let's just say that was the only sort of liability that needed to be covered. It would just be like, okay, well, you're going to 3.3 billion minus 250K in an IOU, and that's basically wrapped up, and then basically you're there waiting for the whole FDIC process to sort itself out. And then once that happens, what remaining proceeds come out of that? That will be, distributed pro rata to the holders of those called IOU instruments, and that's it.
Right. So okay, so already that you're at least it's less than okay. So right now, then it would be at least not worth $1, and it could be potentially more, less than $1. And I guess that's we just don't know. And then it's also time.
Yeah. But that, I mean, let's just, if they open up the exit doors and people go nuts on Monday, I mean, that could depeg. I mean, you would basically see it do like this is like one, right? It's already probably a little bit of this. It would like just flash crash like this thing, and it might jump back. People sort of like, get the first wave out, but it could be very bad for USDC and Circle come Monday. And so that's why, obviously, if you're in crypto right now, you are praying to God that like JP Morgan shows up and goes, I'm going to buy out SVB. And one like, A-OK. But outside of that, I mean, USDC is a scary place right now.
Yeah. So I saw this North Rock LP Hal Press tweet. Circle holds 77% of the reserves in 1 to 4 months T-bills. These T-bills are held at BNY Mellon and managed by BlackRock. This provides an absolute floor on USDC of 0.77. So that's it. So I'll send you the tweet. It is, in fact, oh, can I share? Oh yeah, I can share. Oh, I see. So here we go.
So what do they do here? It's like, yeah. I can't read the exact numbers, but yeah, 3 divided by 42, I think that results in 0.77, or in the ballpark of 0.77.
77 of the reserves in 1 to 4 months T-bills. Do you know what they hold? What's the 23%?
No, 23%. I'm not sure. I'm assuming it could be longer dated
Oh,
treasuries.
I see. Right. So it's not an absolute kind of floor price of 77 cents then, right? If it's, let's take a look. 77%.
Yeah,
Blah, blah,
sure how
blah, blah.
that. But I mean, I would say like unless he put the whole mark to market across like the treasury bills and the longer dated treasuries, then maybe. I don't know what like trading at these is, but I assume T bills are par plus, and then longer term treasuries are probably I don't know.
Yeah, here we go. The 33, yeah, 33 divided by 42, right? So you've got the other USD reserve assets, cash held at US regulated financial institutions. So it's cash.
Well, 3.3 billion is with SVB. We know that.
Right. Okay. Right.
And then the others,
How much was
unclear.
it again? Three, right? You said three.
I think it's I read 3.3 billion is
Yeah, it's
with.
like, yeah, I think it's 3 point. So I want to say the absolute floor is 77, right? It's 33 plus 8 minus 3.3.
I think so.
Right.
But there's probably some analysis. I mean, if you were to be like really draconian about it, you'd be like, oh, every bank went under. Which I mean, obviously, very, very, very draconian. But then, yeah, you only have like how many banks are in there? 2K is the max salvable, and then out of whatever. So I mean, there's some funky and there's math you can do, right? You get to maybe a more accurate floor, I'd say. But to your point, yeah, I think 33 divided by 42 is probably not the
Right. Yeah.
floor. I think there's probably a floor could be a little bit higher for sure.
It's a, yeah. So I just did 33 minus 8 plus, sorry, plus 8 minus 3 and divide by 42, and that was 90 cents or 90%.
Mm. Still
Right.
not great though.
Still not
Stablecoin.
great. Yeah, it's still
Yeah.
not great. But that, okay, yeah, actually, so they're not reading this correct. Treasury securities here, that's the 33. That makes a lot of sense. Then you've got the cash held. Yes, we have to see kind of what Appendix 2 is, but you can assume that's probably just pure cash, short term. Cash to the country, owed by the due to timing settlement differences. Oh, this 2,087,000,000. Okay. So that not in such a bad position.
No, I mean, not horrible, but I would say like, it's like again,
A run
it's
is a
just
run.
not stable, put it that way. But to be fair, I mean, I guess they did everything right. If you're USDC, right? Well, I have my reserves, and I need to. Let's put it this way: cash is not right now because of like don't know what the banks are doing with their deposits. So in that sense, it's really more ironic that like you can't trust regulators because you don't know what they're doing with your money, and therefore, like SVB. And then you can't put your money in long dated U.S. Treasury because it's impossible to maintain a peg when your underlying is fluctuating so much because the Fed is raising rates in I'll call it an uncontrolled, or not uncontrolled, but in somewhat of an unpredictable manner because of what's going on in the macroeconomy. So in that sense, it's like, yeah, circle, and you're supposed to maintain reserves. I mean, honestly, you probably should be trying to reduce the number of stablecoins out there as part of, I would say, maintaining the peg. So in that sense, that's where Circle potentially gets in trouble as well, right? Because if they have to go out and have to burn USDC, that means they have to sell the underlying, right? Their underlying is stuck or in long-term treasury, same as SVB, right? I think they're like also potentially in trouble in that sense, right? Trying to make it big. So it'll be curious because once doors open on Monday, people are going to be trying to redeem USDC for God knows what, and then it's like, they're going to be like in a hard place, I think, unless some good news comes out over the weekend. Now, I don't think this is like be like a fear monger. Like maybe everything's fine. There's like no issues, and we'll all be fine. But just what we're seeing, like in the general context of like people and financial institutions, whether regulated or unregulated, at the first sign of trouble, people are running. There's no like, no one's like calmly like assessing the situation, right? It's like, get my money out. It's prisoners. You believe that nothing wrong. It's like prisoner's dilemma kind of situation, right? It's like, I sky. So like, got to just do it, right? So
yeah,
it's
yeah.
probably that's it.
Yeah, I think it's no. That sounds agreeable. That's something I guess. I don't think anyone's really looking at. So if you think about it, USDC only started depegging because of the circle tie, right? And USDT, as I believe that as not nefarious, but as opaque as it is, it's been okay, right? And so the only is the news on how much they had at Circle, maybe. So again, no news is right. So if you're a stablecoin and it was really USDT and USDC, so just hopefully no more news. Maybe can survive.
Well, I mean, but I guess at this point, if you're in crypto, it's crazy, but actually, it's not crazy. But yeah, the safest place to basically put your money right now is Bitcoin.
I was thinking like, what else? What else to shift the assets to?
That's the safest place, right? Because even USDT is like, yeah, like no one really said anything yet. It's kind of like the fact that they haven't said anything. Also, is like, how much money do they have on SVB2? You know.
Yeah.
So
Right.
yeah, you should add a UST and move it to Bitcoin. I think you can't put it into because now there's like a security scare. Um, so it's like, yeah, Bitcoin probably is where you want to be, and ride out that volatility, and just sort of see what happens. But that, from a conceptual standpoint, Bitcoin probably the safest place is my take. But
Wow, the USDC slippage to BUSD is like 99%.
there you go.
There you go. Wow. Yeah.
Really funny though, like when that whole like Paxos USD thing came, and it was like, CZ's explanation was like, well, like we're dealing with a regulated bank.
Yep.
So that's why we can't process all your withdrawals when you want to, and everyone was like, WF, right? But the funny thing is, like, that's literally what Coinbase just said with USDC,
Yeah.
and it's like, well, in that sense, yeah, shit's gonna go bad. So I just don't see it being just positive news for USDC whatsoever. So I'm one of those people who are probably going to like run. I mean, too late to run for the exit now, but I would run for the exit. Put it that way.
Yeah. It's it's funny. I think it's people still didn't learn the lesson. I think, right? I think just the word stables, right? Just people in this kind of fallacy that it's always going to be stable. And see, at the end of the day, USDT, right? It's obviously it's a stable coin, but we still don't know the underlying, and so yeah, I think at the end of the day, probably Bitcoin is the safest, right? You might as well, because even if you think stables are USD, stables are safe, it is until it isn't.
Right. Exactly. Uh, and like I think with anything, I mean, it's especially anything within financial, like, it's a confidence game. The moment like confidence shattered in any way, shape, or form, not even shattered, like a little scratch, right? Game over. Like people are just going to run away as fast as possible. So that was probably the underestimation on my end with lobbing in I'll call a Hail Mary. Definitely underestimated how how quickly people would just abandon the institution, despite its, its name brand, franchise,
Sure. Right.
longevity of it, everything. People ran away so fast. Now, the only thing I was right about was that they had 24 hours to figure it out. And yeah, it happened that, right? So, but the fact that they got into this position is, it's like it was foreseeable, but at the same time, you were sort of like, nah, not these. Like,
Yeah.
if it was some bank I've never heard of, maybe, yeah, definitely.
It's the
But
16th largest bank.
crazy, right?
Procovia's fourth, I think. It was like that, I think.
Yeah, and they're calling this like the biggest. What is it, like the biggest failure? Definitely. There was something else. I forget, but anyway, it's SVB's definitely in the books as one of those, black and white pictures.
I told Shy, he better keep his mug, his SVB mug.
Yeah,
put it right next to the Lehman mug. I don't think he was at Lehman.
But horrendous. But anyway,
it's yeah. I think you're right. It's a confidence issue. Once it's gone, it's gone. And fortunately, there's nothing that can be done. And it's just I was talking to my friend Naoki and he was the one that gave the European view. But I kind of like, or maybe I did talk to you about it. But it's just like, at the end of the day, we're tech guys. We're supposed to be like a little bit more logical, a little bit more, just huddy-duddy. We're supposed to, we're investing in the next kind of biggest thing. We're the smartest people in the universe. But human instinct is human instinct. If there's a bank run, right? And that just won't go away. And people are like, oh yeah, crypto is a solution or DeFi is a solution. I was like, if there's a bank run on the exchange, there's a bank run on the DeFi, like there's a bank run on the DEX, like DeFi won't solve it. Like maybe good to diversify, right? Don't put like everything in a bank. Maybe put some in don't put it all in USDC. Maybe put some in USDT, and that's fine. But I don't think crypto is a solution. Let's be clear here.
Yeah, it's not the solution. It's probably just to your point, right? Diversification, right? Maybe I don't know, like a DeFi optimist, right? Probably see this as positive in that, like, yeah, maybe people go, I probably should have some money in an alternative place, right? Like banks can go under just as much as a crypto exchange can, just as much as a DeFi platform can, just as much of a CeFi platform. Right? Like in that sense, yes, when it all comes down to it, it is fundamental first principle. Like, is this institution safeguarding capital, right?
Yep.
You believe? Oh.
Yeah, let's see. I messaged somebody else. He was, replies. Ben He said the ramifications. He said it was SVB was also the bank for a lot of wineries. SVB failure will unfortunately impact lots of lives in many industries, not just tech. And I was like, well, there goes my Napa wines. All right. So he's like, moonshine. Let's make moonshine. Let's see what is that? DeFi unironically fixes this. I was like, well, not necessarily. I said bank run, and he said, well, DeFi, we can see where the risk is, who has exposure to who, etc. That's theoretically true. You can see where the risk is. Whether anyone's actually incentivized to make those connections and to alert people where the risk is, I was like, mortgage-backed security, like you could argue mortgage-backed securities was a massive threat. And only how many people figured it out? And banks are, look, as transparent as they are, right? Like they're public entities.
Yeah, I would argue similarly in the sense that, like, doesn't matter how much transparency there, because think about it, SVB. If you were to now look at their numbers, right? You just pull up their latest like quarterly earnings or annual.
Yeah.
You would see this there. It's like there.
Right. Numbers, it was there. Right.
But like, yeah, it's been sitting there in broad daylight and no one caught it. Or I mean, at least, sorry, not no one. Like the majority of people did not see it, right?
Right.
So it's like, yeah, it's not really transparency, right? Or the ability to, I'll call it, be able to figure this stuff out via transparency. It's like people don't care, right? I think because at the end of the day, they believe the banks are safe, and they believe that if they put money in the bank, the money should be safe. So there's this element of like complete trust in the system. And I think, rightfully or wrongfully, like me personally, the person who uses banks, right? Like, yeah, I want to put my money in the bank and not have to like dig through their financial statements to be like, oh my god, is the bank safe or not? Like, I don't want to do that. Not. Right. It's a better use of people's time, right? And that's what should exist. So in that sense, yeah, transparency doesn't solve anything. And let's put it this way: think about this. Why do you trust them?
Because supposedly someone's looking at them, right?
Correct. Like we have regulators,
right?
Wazoo checking out these banks, the public. These, there's so many reasons why you trust the banks. Oh, and also it's a matter of habit, right? Like,
right.
Money in the banks.
Right. So it's two things. One is you trust the banks if they're public banks, is because they're public, so they have to have audited accounts, right? So then it's transparent, it's timely, and then on the other hand, you have regulators actually actively looking at it. So you have the transparency, but if the transparency no one's looking at it, then you're like, well, then that doesn't solve anything. But yes, I think it's the two parts. You've got actual proper books, and you have somebody looking after it,
theoretically. And that's why you would argue DeFi is still behind in that sense, right?
Right.
Throw money into a DeFi platform just as if they would throw a bank, and they probably go.
Yeah.
And you're a DeFi guy right now, and you're thinking, I want to set up a platform where I feel, get as many, users and depositors as possible. Then this is the best thing you're trying to figure out, right? Like, how do I become as safe as a bank, or how do I portray safe as a bank? But look, at the end of the day, as we all know, banks are not as safe as we would all expect, and now banks have gone under, and now we're all going through situations. So in that sense as well, that's why this is an interesting time for DeFi, because now I'd say an element of confidence has been shaken in the banking system. Everybody, obviously me, the non-SVB depositor, I'm still money in a bank.
Right.
But SVB, if I have them 250K in account, I can only now access 250K. I'm sitting like, what the fuck?
Right.
There has to be. So these SVB deposit people are probably DeFi's target market, because these are like, what just happened?
Yeah.
So anyway,
diversification. I think diversification.
Yeah.
Yeah. So I responded theoretically yes, but I don't see that happening. The entire history of capitalism regulations have been converging towards greater transparency, but still the issue has not been solved. It all goes down to incentives and who's incentivized to monitor the risk in the entire system. Roughly.
But that goes against everything crypto is for.
Yeah, and that's the thing. It's like it's that's why I like talking about the history of capitalism and the history of financial history, financial system history, because it's not like these regulations came over time. It didn't come overnight, right? It came after time, because there've been stuff like this, bank runs, currency devaluations, right? And it's not like, and that got built slowly over time. And if you're looking at it from first principles, it's good to look at the history and why they made certain regulations, and then try to apply that to DeFi, right? And I'm not saying, so I think theoretically and philosophically and intellectually, it's bad to just say, well, banks are a regulator, or regulator is bad, or centralized is bad. Well, there are nuances. Why don't we take a look at precedent, why decisions were made, what were these regulations trying to do? And we shouldn't have the same thing in DeFi, but we should probably have something similar, right?
Mm.
For those mechanisms, right? Of those mechanisms, similar things. So maybe like incentives for someone to monitor the entire system. Maybe it is a bounty system, right? That everybody has to pay in, and there's this bounty of systematic risk, right? So there's an incentive for someone to search for it, right? That would have kind of essentially function similarly, and it would be global, right, from day one, right? Rather than FDIC, and the UK has, I think, FCA, and whatever the Hong Kong has MAS, right? It would be MAS. Is it MAS? Yeah,
Hong
Hong Kong.
SFC, no.
HKMA, MA.
MA.
Yeah, MA. Yeah.
Singapore.
Yeah, MAS is Singapore. Yeah. Right. So you have an entire global system from day one. You have a bounty system where people are incentivized to take a look at it. Okay. And that would roughly kind of, function as oversight.
Yeah, I mean, let's put it this way. So I would agree to the extent that the systems were built over time, right? The existing system. And obviously it was built upon fraud. It was built upon tiers, basically, right? People just absolutely getting hosed one way. And so how does that apply to DeFi? The problem is, I think, the problem is, I mean, if we just use like certain experiments that have taken place all over the world when it comes to like bounty systems, the problem with people generally is that they're always going to find a way to exploit the system in a way that is completely in line with the rules, but absolutely the spirit of what the rules were created in the first place. And they obviously for right? And like, so I'm currently, right? So one of the things that they tried to implement before was, they have like enough police to be able to monitor the street. So we're going to do this Good Samaritan program and catch people doing stuff, submit, the video. It's found that they've done something wrong, then we'll pay you money. You a share, right? That program got shut down so fast. I mean, I done for about like a month or two.
Okay.
And realizing people were people were creating
Oh, right. Okay.
where they would like almost force somebody to run a red light because of the block streets and stuff. So that would be the day. I think having this bounty model is that people tend to like just completely. So obviously, that being said, you got to start somewhere, right? So maybe you could start there and then evolves into something else. But my sense is it ultimately all evolves into like centralized authority.
Decentralized authority or centralized authority, yeah.
Right? Because then people are going to be like, well, someone's got to own this process. And then when owns the process, then it becomes like, somebody running, we did everything. I mean, we on crypto, right? We have foundation, right? Like Ethereum, it's supposed to be whatever. They have a foundation. They merge, right? And the merge, that's a very centralized thing to do at the end of the day, right? And we talked about it on the podcast, where it's like they basically just told like every Ethereum miner, you are fucked. Sorry, throw your money away. We're going to be proof of stake. So I just don't think that we were ever that decentralized to begin with, if I'm being completely honest.
100%. I think it's a good aspiration. Don't get me wrong. I think it's a great aspiration, but then it creates agency problems. Right? And agency problems. Is that the right word? Agency problems? Yeah. It's like who's actually doing what, right? And who's actually being incentivized to do what, right? And so you end up, everyone's like looking around the room saying, "Is it you? Is it you? Is it me?" Yeah, and yeah, I think that's the thing. Crypto sometimes can be too philosophical, right? It's not living in the real. Not living in the real world. I think. And if you okay, let's look at analogs. Like, what is really decentralized? Is decentralization actually a thing in the real world?
I say no.
No, I can't
First,
think of anything.
I I actually think the closest thing to decentralization, and this is because I'm American, or sorry, decentralization that can work.
Mm-hmm.
It feels like the U.S. government,
In what sense?
in the sense that, let's put it this way: if you think about managing an entire nation such as the United States, right?
Okay,
3
right.
million people,
Okay.
and at the end of the day, to manage 300 plus million people is a very hard.
Yes.
They basically create small, I'll call it ways, or sorry, not small ways, but they basically, what is it? Create ways to centralize at a local and then at a national level, right? So
Oh yeah.
meaning
Oh yeah. Yeah.
400 million people are now separated.
Yes. Yes.
How these states came to be, how these lines were drawn. I mean, there's a long history behind that, but
Yes.
segmented out. And
Yes.
then to these states, then they have their local governments, right? Who
Yes.
are in charge of managing, their
Yes.
locales, right? And then
Yes.
this all rolls up into, oh, sorry, it's like not the state, it's the counties, right? And then the counties,
Yes. Yeah.
the cities, and into
Yeah.
state, into the nation, right? And
Right.
it's like, yeah, I mean, that makes sense because at the
Yep.
end of the day, the person at the top, Joe Biden, now president of the United States, cannot manage 300 plus million people. And so it has to be like spread out. But at the end of the day, we as the people who are technically under control of Joe Biden do not feel Joe Biden's presence
Right.
whatsoever.
Right. Right.
Uh, so in that sense, in my view, how else are you able to basically manage so many different stakeholders? And that comes with different levels of centralization, but at the same time, it is also feels quite decentralized.
Hmm.
So anyway, that's my personal.
I agree. So I haven't formulated a thesis yet, but I did. I was when I went from 3 weeks, 3 weeks, 2 weeks. When I went from Austin to Houston, I potential partner, but he's a lawyer in Hong Kong, but he was like constitutional law was his favorite subject in law school. And so we spent 3 hours, the entire kind of ride, talking about constitutional law
Mm,
because we were driving through Texas. And so I was like, kind of posed the question, it's like, how did the states come around? Right. And so then we went through the history of the states, right? So it depends. You had the 13 colonies, and then different states were, some were gifted, some were acquired, some were fought and won. So then you kind of eventually kind of got to 50. Um, but then it was like also some were kind of not states, but like Utah, like had two dudes in there, right?
mm,
And eventually at some point they're like, yeah, we should probably make this in a state as well. So then there was a framework and state charters and all that type of jazz. And then the separation between the two is something that happened because there's federal law and state law. And so we were
mm,
talking about that as well and the differences between the two. And especially in Texas, right, where state law is actually quite powerful. They've always threatened to
no,
yeah, right, to annex or
uh,
to be their own independent country. And so the only thing that's regulated
mm,
by the federal government is commerce between states.
states. Yeah.
That's the only thing. So everything else is state law.
Mm,
And now commerce between states is a wide remit. So gun law. So at that point, I think the current governor wants to. It's a political move.
mm,
Wants to allow guns because this is Texas, right? And and their argument to the federal government is we can make our own laws about guns, and the federal government is pushing back and say we regulate guns
mm,
because you can control guns, but what you can't control is gun movement across state lines, and so therefore it falls under our remit.
mm.
And then we talked about like Roe v. Wade as well, um, and it's I think it is state law, and because I think it doesn't govern commerce, and that was kind of like the Supreme Court judgment is like, we'll let the state kind of determine, right?
Mm.
Type of thing. But anyway, the thing that I learned the most was the federal government only regulates commerce between states. That's all
Mm.
they do, theoretically. And
Yeah.
then, but most of it is state. So to your point, like it's decentralized as locally as possible, and then to the county and everything.
Yeah.
But then there is a centralization piece, and there
Yeah.
has to be, right?
No, I would agree. I mean, think of it like this, right? As in, like, just directly back to crypto DAOs, right?
Hmm.
Even if we look at our own DAOs that we're a part of, right? Like, they have committees,
Hmm.
and think of the committee like the judicial and the executive and the whatever branches of the U.S. sort of framework, right? It's like, yeah, they have imbalances,
Right.
and you need a certain group of people to handle certain parts of different activities. Right?
Yeah.
It's all these DAOs are just like, 100 people, and yeah, everyone plays it and figures out like how to make progress. You got to have like some people driving certain things, and so you call it centralization or not, I don't know, but to me, it feels like there's definitely centralization.
Yeah. 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 And then, so I would like that conversation with the lawyer, constitutional law. It kind of made me also, and then I started kind of thinking about the history of the United States. The history of the United States is actually one of it's a very lucky country. It's never
Mm.
been invaded. It's a freaking island, right? Because it actually is protected on both sides with water. Uh, and then on top and bottom, you've got a neighbor that's not very strong. Both neighbors are not very strong, right?
Mm.
So, so this centralized, decentralized state is a product of, I think, this geography. And because then I was like, I'm most familiar with like the UK,
Mm.
and I was like, the UK is really good, um, and but the way the US was built is very unique. I guess what I was trying to kind of arrive to is like the centralization decentralization concept is something that perhaps only can work in the US. Or is it,
Mm.
something that can work in the US? And I guess what I'm trying to say is like, are we trying to inject a centralization, centralized, decentralized view of the world and trying to fit it into cultures, into DAOs and the whole concept of the internet in a way where maybe it naturally won't exist, right? Because the U.S. form of government has not been successful pretty much anywhere else, right? So yeah, yeah. So I guess I was just saying, is centralization, if one takes the view of this, is it applicable to every use case and everything? And I guess I don't know. I don't think I've kind of come to an answer, but
I I I tend to think of this concept of like innovation
okay.
and how much is truly going to be that different
Mm.
because of whatever innovation, right? So we can talk about crypto, we could talk about AI, right?
Right, right.
Like, and I think we see it more prominently with AI just because talk about AI safety.
Right.
Um, but then it's like all technology, it's meant to do all these great things. At the end of the day, what it can obviate is the human element.
Right.
Like, we are actually a problem to our own ability to achieve. And the reason why we are the problem is we are also the maker. So when
Mm.
you are the maker, or the innovator, the maker, at the end of the day, like, the reason why things crash and burn is because of you.
Mm. Yeah.
So AI should be this. It should be able to do all these amazing things, like that be superhuman and all this kind of stuff. Today, AI is going to be limited by people and people's bias, and it will
Right.
never be what we want. Crypto, same thing.
Right.
It has this ability to really be truly decentralized, But at the end of the day, like we have our biases, right? Even now, like you and I, we're decentralization. In reality, it sounds very easy. Is that going to be able to achieve? Because, well, look, it's all run by people at the end of the day.
Right.
We're just going to be able to, I think, get out of our own ways in that sense. So that's why I think I don't know if you were trying to make this point, but I guess, the reason why these things cannot happen is because of, cultural biases, right? UK, US, Australia, wherever you're from, you just have certain biases going to be able to, I think, shake despite your best efforts, because that's kind of, like what person in the world has grown up truly decentralized?
Right.
It's just not innate. It's like no one knows how to really think that way, and even if they can, is completely like against everyone's body. Just not what you truly believe in your part of. So
yeah,
that's
I had another I had another thinking as well as like, because from like American natives, it's like if we allow this to happen, the FDIC doesn't kind of quicken this process, we will set back the industry 10 years. And like, how much of being great for the last kind of 10 years, how much of it was like people and everything, and how low interest rates? And I was like, if we didn't have low interest rates, would as much as it did, like if much washing around, like would the tech center be, tech we are right now? And I was like, I don't know.
I mean, I have to imagine that it be definitely not where it is now. Not because of human ingenuity or human inventiveness. It's just straight up capital, right? As in, like, all the ideas may not have been funded in a tighter capital environment, got funded because there was money.
That's right. So that was kind of my thinking. Yeah, like the whole Y Combinator concept of throwing 100K around. Like if 3 or 4%, kind of like I don't know, should I do it? If you're getting like, I don't know, 1% less, you're like, okay, all right. So I don't know.
No, I like low interest rates definitely play a part in the innovation game, but it's more just that with more capital, more ideas are able to get. That's sort of how I would think about it. They're all there. It's just money obviously makes things come to life, and fortunately or unfortunately, but I would think that
It probably isn't okay. So having taken a step back, it's a very entrepreneurial place, right? So everybody goes and creates businesses in the U.S., right? So that will always be there. Maybe it's the volume of people going into tech, right? It's the but it's not the volume because the capital, like you have less capital. If you have higher interest rates, less liquidity, less free capital floating around, just less startups are funded. Maybe people are a bit more conservative, but nonetheless, it would still be a good environment relative to anywhere else, right?
I mean, I think of it like, if you think about like the crisis, right? Like 2008, right? It was basically the beginning of the. I mean, probably a little bit before then, but it was the beginning of the end of finance, in my view. Like the smart people didn't want to be finance guys anymore. They wanted to go into tech, right? So that's all. That was the rise of tech then, right? That's when Facebook was first starting up and coming about, right? Google was just sort of there. Everyone was like, all the smart guys wanted to go into because they wanted to get equity. They wanted to get that huge upside. So at the end of the day, I think smart people tend to go where they have the most upside realization potential. And I think what is, tech is going through, and this happened before SVB, right? It probably last couple of years. It's like all those tech companies, right, that were one high flyers are now like, unlike the investment banks, they just sleep fat, right?
Right.
And now at the first level, they're cutting people, just
Right.
like investment banks.
Yep.
And now guys are going somewhere else, and
Right.
they're gonna be like, and as your point, right? Like next week, school, they're gonna be like, do I really want to go into tech, or like,
Right.
I want to, I'm gonna make the most money, and I don't know if that has really surfaced in terms of like what
Right.
industry be the
Probably.
next, call it like, whatever.
Yeah. Yeah. Probably. I think it still will be tech. I do think it will be kind of like a Web3 crypto thing. Just because I think the barriers to entry are pretty low. I mean, not low in a bad thing. It's just like anyone can kind of contribute. And then having been an investor in AI, like the barriers of entry to go into AI is pretty high, right?
Mm.
It's you don't have to like build an LM by yourself, but I'm just saying you don't need a PhD, but you still kind of have to know your way around a little bit, right? And I think with crypto, it's easy enough. There's like different ways you can contribute to the ecosystem, right? You can be a developer, you can be a marketer, you can be an influencer, right? So you can do content. So I do think kind of out of all the narratives that I've seen, now obviously there might be something I haven't seen, that seems to still be, no one's going to go back to banking. It's just too painful. Um, but I just can't see anything else. I mean, and can take the people, I think. Like, we were running the numbers, right? So right now, 30% of startups are involved in this
Mm.
SVB thing. And then we're just like, okay, how many startups are there in Silicon Valley? And 30% of the companies are affected. How many companies on average does that represent? We said 5 to 10. So essentially, so out of Silicon Valley, 150,000 people are being affected. This is only
Mm.
the valley. This is only the valley, right? Um, that's a lot of people that basically will not get paid, right, on Monday, right? And so there's a lot of people coming on the market. And so what the hell are they going to do, right? And so what industry can kind of take that influx of people?
Yeah, maybe. I don't know, but I the one thing I would agree with you on is like I do think it will be, the place where there is, I'll call it lowest barrier of entry, but again, to your point, not in the bad way, but in the way that which people can sort of like, dive in, right?
Right.
But in that sense, like I would still sort of lean towards, and maybe this is the same, maybe I'm saying the same thing as you, but it's like I think startups generally
Mm.
is where people will go because
Right.
that's where you can, self-actualize. Like, are you as good as you think you are, type of thing, and money where your mouth is, blah, 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 right? Now, what industry segment and that kind of thing, I don't know for sure. But I do
Yes.
think the startup area is still going to be, I think that's where people go.
Yes. True.
Now, um,
True. 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 Maybe not like what, who knows, but yes, startups in general. It is
yeah.
easy. Anyone can find a way in somehow.
And, I hope with all these like alert programs out there, obviously, you got me involved in Techstars, right? It's interesting in the sense that like, I don't think it's that hard to like an accelerator program. Uh,
What,
I mean,
as a startup or?
as in like, it is hard, but like, I think there's so many accelerators out there.
Oh yeah, true, true.
You can clip checks like from a wide experience of different institutions and programs where if you truly like a really motivated team or a group of people,
Right.
like you could find money to actually get shit done.
Yeah.
It doesn't have to be White Combinator, right? It doesn't have to be
Right. Right.
any of these. programs that are $25,000, whatever it is, up to like 200, whatever. But
right.
In that sense, do you think that like it does help in that what we were talking about, like startups, right? Like you're not really, it's not startups like of lore, like 2008 version, where it was probably a little bit harder to raise money. In that like there were just not as many programs, not as much capital, etc.
Right.
Fast forward, ton of these programs, ton of capital. But I do think that to get started going is a lot easier than it used to be as well.
Right. Right. I think you're right. So yeah, I think that's probably the best orientation. Startups in general. Then you can probably find like general startup accelerators, and you find Web3 accelerators, and you can kind of like fashion accelerators. Yeah, right. So it generally is tech, and then you can kind of find your niche in there depending on what your previous industry is. You know, maybe whether you're a fintech guy or you're a fashion guy, right? Or yeah, whatever, right?
Yeah.
Right. Because yeah, a combination of like, you know, education, right? So there's a lot of like, you know, stuff you can learn on YouTube. The barriers of entry in the sense of like tooling, right? So, you know, the canvas and the, you know, it's just a lot of tooling in general. The education, the capital, even though yes, things have dried up, they're still relatively easy forms of capital as of this moment. Um, and then the remote work thing, right? So literally you can be anywhere, right? Some guy in Timbuktu can start a startup, right?
Yeah.
Because he has access to like the education, he can set up something, you know, LLC from afar, whatever, right? And he can get hired by somebody in a US startup, whatever. But it's that remote capability is there as well.
No, yeah. That's right. Easier to find people as well, right?
Yeah.
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 Oh.
Yeah. Yeah. It's always I've always had this easy. Yeah, just follow the smart people, right? It's just kind of where they go. Generally is a pretty interesting kind of place to be.
That's why, up, man.
just like you.
Place. Thanks. Calling you though, to be fair.
It's just like, yeah, smart. Well, we're just smart people we're not so smart people trying to have a smart conversation.
That's right.
But that's why I like this content stuff. You just have lots of conversations with lots of people, and kind of see. I don't know what's going on. Cool. We got only 5 views today, but it is a Saturday night, so oh well.
You know, I'm waiting for that Sunday morning pump, man. Put it that way.
But I would say this: like now we can record it. I'll title it, send it to you. When we tweet about it, then we can like, hey, we talked about it here.
This one is super long though.
This one is super long. I know.
I was like, holy crap! No one's gonna listen to an hour and 20 minutes.
I'm gonna have to. Yeah, I have to go back and do like, yeah, this will be hard. Like the show notes and stuff. Like, oh, this part we talked about this, and so, yeah, that's gonna be hard. I might not do that like anytime soon. But I'll probably summarize and say we talked about it, and then just have people listen.
Yeah.
Where exactly did you talk? Yeah. Cool. All right.
Cool.
Good night.
Cool.
Ciao. Bye.